First, the president says he will hit drug imports with a 100% tariff increase if those companies fail to build out operations right here in America. Those tariffs are kicking in on October 1st. U.S. pharma stocks are reacting in a kind of mixed way right now. You can kind of see now. You can see Eli Lilly is actually up. Now, the thinking there, Eli Lilly has a good amount of its production here in the United States. Merck, Pfizer, Gilead moving a little bit to the upside, marginally so. Moderna shares down fractionally. Around the world, though, you can see a little bit more of a different picture. As you can see right there, some of the biggest names in global pharmaceuticals are taking relatively bigger hits than our U.S. counterparts here. Now, separately, the president is also unveiling a new 25% tariff on all, quote, heavy big trucks made outside of the U.S., a 50% tariff on all kitchen cabinets, bathroom vanities, and associated products, and a 30% tariff on upholstered furniture, all taking effect October 1, all under the guise of national security and U.S. job creation. This is a lot. So let's break it down with former U.S. Commerce Secretary Carlos Gutierrez. He's a guy who knows a thing or two about global trade during his time at Kellogg and, of course, as the Secretary of Commerce. Carlos, this is a lot to unpack. At the end of the day, the pharmaceutical tariffs, we kind of knew were coming because he hinted at them. Just how much of an impact will it be on companies, not just here in the U.S., but global ones who sell to the U.S. as well?
Yeah, this is a big move. And as you say, this was announced back some time ago. We knew it was coming, especially the threat that unless you build a plant in the U.S., you're going to get these tariffs. It happened a lot quicker than I expected, and they start on October 1. So, yes, it's for branded pharmaceuticals. So generics will be saved from this, but it's a big deal, especially this intersects with the negotiations with Europe, because Europe is a major manufacturer. And then the other thing that we have to keep in mind is the announcement that was made regarding equalizing pharmaceutical prices. So we sell higher than the rest of the world. We want the rest of the world to move up so that we can move down. That's also coming, at least based on the announcement. So pharma is getting hit, and I hope that some plants can announce a major investment in the U.S.
All right. Right now, we also have new developments here from our trading partners in the U.K., which have been at the forefront of trying to sign more advantageous deals. The British are saying now that they are trying to push for a better outcome on U.S. pharma tariffs. We've also got some comments out of the European Union saying that the European Commission said on Friday it had secured a 15% ceiling on U.S. tariffs on pharmaceuticals, acting as an insurance policy for some of the European companies being impacted. So many of these stories that are coming out from Reuters, from the Wall Street Journal, elsewhere, are showing the reaction to this. What other reactions will we see, and will this lead to more, quote-unquote, deal-making from other countries with exposure in pharma companies to the United States market?
For sure. And as we know, everything's up for negotiation. One that I'm watching that will be interesting is Switzerland. Isolated, but they're a big pharma manufacturer. The president hit them with a big tariff. It was 38% or something, surprisingly. So this could be a way of getting them to the table. I'm sure Switzerland will want that tariff to come down. But that's one to watch. Ireland, of course, is a big producer, exporter. So though Germany, Ireland, Switzerland, India, but less so because they're generics. China beginning to get into pharmaceuticals. But I would keep my eye on those three countries. Those are, important.
It's interesting, Carlos. I was looking at, I use a lot of the generic kind of over-the-counter pharmaceuticals. I looked at the naproxen, the generic Aleve that I take, and it's made in India. So the generics are obviously not part of this, but still a big part of the story. Please stick with us here because I want to talk shutdown with you in just a moment, okay? First, though, let's get out to Emily Wilkins, who's looking at what might be impacted in a potential hypothetical government shutdown scenario. Emily.
Hey, Don. Well, I feel like it's getting less hypothetical by the day. At this point, it does seem like a shutdown could begin on midnight Wednesday, October 1st. And unlike last time a couple years ago, this is set to be a full government shutdown. All agencies are likely to be impacted. And I have to caveat this real quick. Usually by this point, departments' plans for the shutdown have been made public. At this point, we haven't seen those specific plans yet, so we can't say with 100% certainty exactly what's expected to happen. But let's use past shutdowns as a guide because they've often been pretty similar. There are many smaller impacts. They add up over time. Let's start with the first big one. If the shutdown goes till Friday, no jobs data on next Friday. That won't be put out. There could be delayed loans to small businesses and farmers, slower lines at airports. A lot of us are familiar with that one. And then, of course, the big one, no pay for workers and contractors. That's millions of people right there. Moody's estimates that for every week of the shutdown, GDP growth for the quarter is going to be reduced about 0.1%. And since U.S. national parks and monuments are also going to be shut, the U.S. Travel Association is out with an estimate that the travel industry, airlines, and rail are going to lose about $1 billion each week. And of course, the longer a shutdown goes, the bigger an impact it's going to have. For example, federal workers, they won't see a break in pay reflected until their paycheck until October 10th. And of course, we should say there is still time to avoid a shutdown. 5 days can be a very long time in Washington, D.C. But right now, between Democrats insisting they need provisions on health care and the White House threatening to lay off thousands of federal employees, it's just not looking like an agreement is going to be coming together anytime soon. Dom?
All right, so Emily, this is a partisan debate. We're trying to come to a deal between both sides of the aisle. In a scenario like this, though, when the GOP controls the executive branch, controls the Senate, and controls the House, is there any kind of a perception issue at play with regard to who would be responsible for the ultimate effects of a government shutdown if it were to proceed?
Well, Dom, that's actually part of what Democrats are banking on here. They're saying, look, Republicans control to both chambers of Congress as well as the White House. They know that they need at least 7 Democratic senators to vote with them. So it's up to Republicans to make the deal. Meanwhile, Republicans are saying, look, Democrats, you've been in this position before of having to do a short-term continuation of funding while you hash out a bigger deal. You've supported these bills before. There's no reason for you not to support this one. And so that seems to be the tension here. I mean, I say negotiations, but in reality, it doesn't even sound like the two sides are really talking to each other at this point.
All right. Thank you very much, Emily, for that. Carlos, I'd like to get your thoughts here. You've dealt with this kind of a scenario before. How important of an issue is this going to be to get the government funded and back operational? And would a lingering government shutdown truly impact GDP and the trajectory of our economic growth?
Yeah, this is a crazy process, and it's always been, it's a lot of political theater. So Congress approved a budget, right? The big, beautiful bill. That deficit that was approved becomes debt, right? It's like a P&L and a balance sheet, very straightforward. But now we're arguing over the debt. But we agreed to the debt when we agreed to the deficit. So it's an opportunity for theater. What the Democrats want, of course, is to restore some health care and extend the Obamacare registration period. Theoretically, that was already approved in the budget. They are citing rescission. So the president cut expenses that had been approved, that he was obligated to spend. And that's what the Democrats are pointing to. You already broke the deal on the budget, so we're going to push you to restore health care. That is an unwinnable argument. With the American public, it just sounds so technical. Now, the fact that the president has said we're going to dismiss these people, not furlough, that's a major step forward. So, as usual, he's playing hardball, and I just don't know how the Democrats get their voice through and get their arguments through. It's a tough one for them.
It's going to be 5 days worth of a lot of perception being formulated.
Yeah, exactly.